Decoding Robert Kiyosaki's impending economic crash prediction. The global economy is teetering on the edge of vulnerability, sending shockwaves through the financial world. In this video, Robert Kiyosaki, the legendary financial advisor and millionaire, unleashes a stark warning. An imminent economic crash may be lurking just around the corner. By the end of this video, you'll have gained invaluable insights, truly solidifying it as a golden ticket to safeguarding your future amidst this turbulent storm. The world has emerged from the grip of the COVID-19 pandemic and the aftermath of Russia's invasion of Ukraine. However, caution is warranted as significant obstacles continue to linger. The foreboding credit bubble lies at the crux of the economic fragility. It resembles an inflating balloon driven by loose lending practices and artificially low interest rates. This precarious situation can potentially unleash catastrophe upon the global financial landscape. Should the credit bubble burst, the repercussions would ripple across the global economy, leaving devastation in its wake. Vulnerable populations would bear the brunt of these consequences, magnifying the suffering of marginalized communities. Immediate and long-term repercussions could fracture societies and deepen existing inequalities. As the illusory gains of the credit bubble evaporate, an inevitable economic downturn looms. Consumer spending, investment, and business activity would decline, driving nations toward a protracted recession. Specific sectors like housing or commodities may crumble, intensifying the overall collapse. On July 17th, Robert Kiyosaki tweeted, "I don't play the stock or bond market. As a business owner, I prefer to have too much power." Nevertheless, too many indicators point to a serious stock market meltdown. If your financial future depends on stocks and bonds, please exercise caution and consider seeking expert counsel. As a savvy entrepreneur, Kiyosaki values having his hands firmly on the wheel of his investments, and that's where his skepticism about relying on the stock market creeps in. He believes in steering his financial destiny rather than being at the mercy of market forces. Yes, the stock market has been celebrating, with the S&P 500 boasting a remarkable 18.1% surge this year and the Nasdaq Composite skyrocketing by 34.1%. Could these gains be temporary, luring everyone into a false sense of security before everything comes crashing down? Is Kiyosaki predicting a recession or a depression? Well, you see, a recession, a temporary economic setback lasting several months or a year, is characterized by reduced GDP, rising unemployment rates, and a drop in consumer spending. Yet, depression is an entirely different beast. A prolonged and severe economic downturn spanning multiple years, resulting in widespread unemployment, deflation, and financial instability. Kiyosaki implies that the potential market crash may go beyond the boundaries of a mere recession and plunge us into the depths of a depression. Might another crisis on the horizon surpass the magnitude of the 2008 crisis? Well, looking back at the 2008 crisis, the subprime mortgage bubble triggered the crisis and resulted in a severe recession, with widespread bankruptcies, bank failures, and a significant drop in economic output. The echoes of the 2008 financial crisis resound loudly, reminding everyone of the consequences of ignoring cautionary tales. Despite the subsequent regulatory reforms, Kiyosaki criticizes society's failure to learn from past mistakes, which could exacerbate the impact of any future crisis. There are several factors he highlights as contributing to an imminent collapse that simply cannot be ignored. Firstly, the global financial system's increasing instability is cause for great concern. Geopolitical tensions, volatile stock markets, and excesses in risky financial practices are like cracks in the foundation of our economic stability. With each crack, the risk of a catastrophic collapse looms larger. Secondly, the ever-widening gap between the rich and the poor is a social time bomb waiting to detonate. As the wealth disparity grows, so does social unrest and political instability. Society cannot flourish when opportunities are limited to a privileged few. Resources. Thirdly, the rising national debt poses a serious risk to the stability of the financial system. Continuously spending more money than you generate is a recipe for disaster. This debt falls on the shoulders of future generations, burdening them with unsustainable obligations. Lastly, the Federal Reserve's relentless printing of trillions of dollars has consequences beyond measure. This influx of new money can lead to skyrocketing inflation, devaluing everyone's hard-earned savings, and eroding the purchasing power of ordinary individuals. In the past, recessions seemed to sneak up on people, catching CEOs and economists off guard. It was a hush-hush topic rarely discussed in public. But fast forward to today, and everything has changed. CEOs are stumbling over their words, desperately trying to warn everyone about the looming recession. If one turns on the TV, they'll hear every expert and economist uttering the dreaded R word, recession. The sheer unanimity of these warnings is unprecedented and impossible to ignore. So, what's causing this collective panic among the financial gurus? Economists widely agree that the economy is poised for a period of contraction. This downturn's precise magnitude and length are still debatable, but the consensus is clear. Individuals and businesses are in for a bumpy ride. And who's to blame? Look no further than the Federal Reserve. Inflation is the villain that haunts the economy, and the Federal Reserve's response could inadvertently trigger a recession. History has shown its tendency to repeat itself. When inflation runs rampant, the Federal Reserve typically counteracts it by hiking up interest rates. It's a tried and tested approach that often leads to an overheated economy. And just like a balloon reaching its limit, the economy eventually crumbles under these soaring interest rates. However, not everyone shares the same doomsday outlook. Mark Zandi is a top economist who stands apart from the crowd. Zandi believes the Federal Reserve can finesse its way through this recession minefield. By expertly timing interest rate increases, Zandi hopes people can avoid crashing and burning. The prevalent sentiment is that a recession is hurtling toward individuals and businesses with no detours in sight. What sets this situation apart is the unprecedented public acknowledgement of the impending crisis. CEOs, who traditionally stay mum on such matters, are now speaking out. They're addressing the elephant in the room with sincerity and urgency. The sheer volume of voices sounding the alarm has reached extraordinary levels. In the not-so-distant past, investment banking analysts were fervently proclaiming an imminent U.S. recession in either 2023 or 2024. However, a shift has occurred as these predictions now adopt a more subdued tone while discussions of potential downside persist. Consider the case of Goldman Sachs, a renowned institution known for its insightful forecasts. Initially, they expressed a consensus of a 65% likelihood that the United States would fall into a recession by January 2023. Yet, circumstances prompted a recalibration of their projections, lowering the odds first to 35% and now a mere 25%. This adjustment primarily stems from the resolving cataclysm of the Silicon Valley bank collapse and the diminishing possibility of a crisis in the banking industry. Nonetheless, the specter of the recession still looms, albeit with a diminished probability. While no one can predict precisely how severe this recession will be, one thing is undeniable. It's time to take action. It's time for individuals and businesses to brace themselves for the economic storm ahead. Here are 4 top tips to prepare for the storm ahead. The first step in preparing for the economic crash is to analyze and fortify your financial fortress. Take a close, hard look at your personal or business finances. Scrutinize cash flow, assess debt levels, and evaluate expenditures. It's time to evaluate your priorities and focus on the essentials. Examine personal and business expenditures carefully, spotting frivolous expenses that can be cut loose. Businesses should strategically reevaluate supply chains, prune non-essential expenses, and explore alternative cost-saving measures that keep their vessels afloat. By cutting unnecessary expenses, negotiating payment terms with creditors, and building up reserves, you'll brace yourself for the inevitable storm. Secondly, diversify your investment. Diversification is the lifeboat of financial stability. In uncertain times, it's essential to broaden your portfolio across multiple sectors, assets, and geographical regions. For instance, if you have $10,000 to invest, you diversify instead of pouring all your money into a single stock or industry. You invest $5,000 in stocks, $3,000 in bonds, and $2,000 in real estate. Now, if the stock market crashes, your entire portfolio won't be wiped out. The bonds and real estate investments serve as a buffer, allowing you to weather the storm and capitalize on potential opportunities. Diversification is like having multiple strings to your bow. It maximizes your chances of success and minimizes the potential impact of a crisis. Thirdly, go for recession-proof assets. By investing in recession-proof assets, you not only protect your hard-earned money, but also set yourself up for long-term success. While others worry and panic during economic downturns, you could sit confidently with a resilient portfolio that continues to thrive. Consider real estate, the evergreen superhero of investments. Whether residential properties or commercial buildings, real estate has proven to be a haven, providing a consistent flow of rental income and the potential for appreciation. It's like having a fortress of financial stability. There's also another hidden gem to invest in on: utility stocks. Utility companies such as electricity, gas, and water providers offer essential services without which people simply cannot live. During recessions, these stocks tend to shine even brighter. They generate stable cash flows and offer reliable dividends, making them an ideal investment choice. Imagine owning stocks in a power company that keeps the lights on regardless of economic conditions. These utility stocks act as pillars of stability and profitability in your investment portfolio. And the third top recession-proof asset is commodities. Even during the most challenging economic times, people need necessities such as food, healthcare, and household goods. Investing in companies that produce and distribute these essential goods allows you to tap into a consistent income stream. For example, consider investing in a food production company that supplies groceries to customers worldwide. Or consider investing in a pharmaceutical company with a high-demand portfolio of medicines and healthcare products. These investments provide a steady income stream and financial strength regardless of the economic climate. With recession-proof assets in your portfolio, you become the master of your financial destiny. Secure your future and create a legacy that lasts for generations. The time to invest in recession-proof assets is now. Don't miss out on this opportunity. And fourthly, start investing in yourself. Start acquiring new skills, certifications, and qualifications that make you an irresistible asset in today's competitive job market. As you grow and evolve, you become a force to be reckoned with, capable of not only surviving but thriving in any economic storm. Employers will clamor to have you on their team, knowing your adaptability will drive their success. But it doesn't stop there. Investing in personal and professional growth is a game changer if you're a business owner or entrepreneur. By staying one step ahead of the curve, you become an industry trendsetter, always in tune with your customers' needs and desires. This enlightened perspective gives you the edge to ride the wave of change and keep your business afloat, even during the toughest economic downturns. Whatever the future holds, one thing is certain: vigilance is paramount. Take this opportunity to reassess your investment approach, diversify wisely, and seek professional guidance. Let Kiyosaki's words echo in your mind as a reminder to stay alert and agile amidst market volatility. Secure your financial future with well-informed decisions and a strategy tailored to weather any storm that may come your way. So, it's crucial not to ignore the ominous clouds forming on the horizon. Take the first step towards an extraordinary future by hitting the subscribe button and watching the next video. The next video is a force for change, capable of unlocking the doors to a prosperous future and paving the way for unprecedented opportunities for you.